This is forexoverviews.com, and on this video I will be presenting a medium and short-term analysis of euro-dollar forex pair. Today is June 5, 2013. Now it's 11:15 New York time, and let's see how the market behaved for the few past days and what we can expect to the forex day of 6 June. Okay, so let's start with this chart. This is a daily chart of euro dollar. Here we can see our moving averages, and by this formation we can see that the market stands above the 200 period moving average, which is marked in gold here, and this by itself is a bullish signal. It signals the power of the bulls on the market, and the market is now fighting against the 100 period moving average, which is this one in gray. The other two moving averages don't tell us too much. Market is in some sort of congestion for the past 2 months, so we can even erase them. And if we take a look at the behavior of the market regarding the 200 period moving average, we can see that very often the market produces a false breakout of this MA, and after this it goes to the other side following some nice move. We could see it here, market break it up to the downside, congested a bit, then break it above again, making some upthrust. If we see the past, we can see similar things happening. You can see here market break it above the MA, made a false break below it, and returned it back, making good upthrust. If we scroll back again, we can also see it here, same situation, and also here, and market goes to another great move. So maybe we can be in front of this situation again, a false breakout below the 200 period MA, and maybe the market could be doing another up move from this point to the upside. And now, as I said, it's fighting against the 100 period moving average. Now let's see another chart. Here is a classical technical analysis pattern, which is the head and shoulders. We have talked about it on our previous long-term analysis. Please refer to our previous long-term analysis video for more details about it. We have another head and shoulders on this long-term analysis, an inverted one, and I favor the breakout to the upside of the other one, but we cannot talk about a medium and short-term analysis without showing these pictures. So here is it. This is still in potential. The neckline hasn't been break down yet, so we need just to take attention on this pattern. Let's see another overview of the daily chart. Let's see the lines, and first let's say that market made a good move to the upside, capped by this uptrend line, and it breaked to the downside, and by doing it market has produced a downtrend line marked in red, and has made a strong and good looking downtrend to the downside. But here the fact is that market is fighting against these two areas marked in blue. this area here from the 132 even and 131.25, and this other area down here from the 128 even and 127.45. And now market is stuck against these two areas, and it's trying to break out to the upside this downtrend line. It's trying, but until it don't takes out this blue area of resistance, we cannot say about some good up move. Okay, so market is stuck now. It's fighting here at this area. At the first moment we can see that it has already been breaked to the upside. It has already made a breakout of this trend line. At last, apparently it's looking like so, although not a strong breakout, no trusting bar to the upside, just small candles, but still this is a breakout. Well, we don't know if this breakout will have the power to continue and take out this area. If this will be not the case, we can count on another move to the downside and maybe the retest of this zone again. So keep an eye on this zone, on this area here. This is an important area that the market is fighting against now, and we need to monitor this area and see and watch the behavior of the market around this area. This will tell us much about the future moves of the market, how market will respond to this area. Let's see another overview of the daily chart. Let's see the lines, and first let's say that market made a good move to the upside, capped by this uptrend line, and it breaked to the downside, and by doing it market has produced a downtrend line, market in red, and has made a strong and good looking downtrend to the downside. But here the fact is that market is fighting against these two areas, market in blue, this area here from the 132 even and 131.25, and this other area down here from the 128 even and 127.45. And now market is stuck against these two areas, and it's trying to break out to the upside this downtrend line. It's trying, but until it don't takes out this blue area of resistance, we cannot say about some good up move. Okay, so market is stuck now. It's fighting here at this area. At the first moment we can see that it has already been breaked to the upside. It has already made a breakout of this trend line. At last, apparently it's looking like so, although not a strong breakout, no trusting bar to the upside, just small candles, but still this is a breakout. Well, we don't know if this breakout will have the power to continue and take out this area. If this will be not the case, we can count on another move to the downside and maybe the retest of this zone again. So keep an eye on this zone, on this area here. This is an important area that the market is fighting against now, and we need to monitor this area and see and watch the behavior of the market around this area. This will tell us much about the future moves of the market, how market will respond to this area. Now let's start to talk about the possible moves in the case of breakout of one of these two areas in blue. So firstly, if the market breaks up to the upside, one of the possibilities will be this one. Here is another overview of the daily chart, and a possible move would be this godly 222 sell pattern that is marked in the red lines here. This is an ABCD pattern completed at 132.90, and this will be an agreement with a 618 Fibonacci resistance at 133.41. So it's a good looking pattern, a good looking shape, and this could even be the wash and rinse of these highs. So this is the first possibility. The market could just break a little above this area in blue and return right back about it due to this completion point of ABCD in Gartley 222 making an agreement with the 133.41 area. This is the first possible move. But if the market passes through this area to the upside and without any respect of this godly 222 pattern, if this breaks it up, this on to the upside, this pattern will fail and it will give space to another one. Let's see another chart. Now this is a weekly chart of euro-dollar. This is not daily, but this is weekly, and we can see here that if the market passes the zone here, it will it's possible that the market can produce this picture here. In blue, this is a butterfly, or you can also call it the crab pattern, but still I prefer to call it the butterfly according to some books. And possible targets for it could be 139.70 and even 143 with the 127 and 126 extensions of this butterfly. And there is even another pattern here that could be formed, another godly 222 sell pattern, which is marked with the red lines, and this pattern's completion points are very near. You can see here for a weekly chart that this is too small distance, about 100 pips for the weekly chart. This is very small distance, and the completion points of these two patterns are near the 78 pip resistance of this wall down move at 143.15. So if the market passes through this area without respect and continues pushing high and even taking out this high here, it could reach as far as 140.10, but this is a even more medium-term analysis, but still it is a possibility. And at another hand, if the market would break this area to the downside, we can get this picture here. This is another Gartley 222, but this one is a buy. This is an ABCD pattern after an upward move. Its completion point is at 122.70, and very close to it is the 88 fib support at 122.30. So in the case of the breakout of the zone here, market can reach as far as the zone here, down here. Okay, and since the market is fighting against these two areas of resistance here, another possibility, instead of breakout to the upside or to the downside, market could make some real consolidation here. For example, market could reach here and stay in sideways consolidation for some extended period of time. So this is very real possibility in market. Sometimes, well, not sometimes, but many times market produces structures like this one on the daily chart or even higher time frames. It stands for consolidation in some extended period of time. Okay, so this would be another possibility to be watching for here. And there is a detail here that gives us some hint about potential move of the market. Is this ABCD pattern here that I'm marking with the fib expansion tool. Let's see how it's being developed. Here we can see the ABCD pattern, and market stopped at the 618 Fibonacci expansion. It could not reach the 100%. So after this strong move, the fact that market couldn't reach the 100% extension tells about the weakness of the market. It tells that the market has still significant bear power. And another fact is that after completing just the 618 extension, market continued move, a strong move to the downside, passing the 618 Fibonacci support of this roll up move. So this is a signal of bear power here. It's a signal that the market has weakness in it, but by itself we need to wait and see market response to this area. Now on the George-Napoli framework, from now on we will start to see more signals of bull power on the market, and as at this chart we can see that the trend is bullish here. And not only this, but by the distance on the MACD lines we can see that trend is strongly bullish. Also we can see that there are no divergences on the MACD lines here. And on this another chart of the George-Napoli framework, we can see the displaced moving averages, and we can see that market is holding above the 25/5 moving average and even above the 7/5 displaced moving average. So this signals a bull power of the market, because this is a more medium to long term moving average that's used by George-Napoli to mark and limit the trend. So it stands above it and it's marking the bull power of the market. Now let's switch to another overview of the daily chart. This is the price action framework, and we can see here a crossover between the two MAs of the price action framework, and by this we need to look at buy signals at rotation points of these two MAs. So this indicates bull power on the market. But keep in mind that if the market will start to make some consolidation for extended period of time, as stated previously, if the market starts to do something like this, we need to keep in mind that crossovers are not a good thing to be looking at, because we will see a lot of whipsaws, and most probably the price action framework will give no signals or a few false signals, but still this is a signal of bull power on the market. And now some pivot points on the daily chart. Here we can see the monthly pivot points. The teal lines are always the pivot point itself, the red lines will be the resistance one, and the light green lines will be always the support one. Let's see the behavior of the market on the previous month. We can see that in May the monthly pivot support one held the market, and this is in fact a good sign and a sign of bull power on the market, because when the market is in some uptrend, it's intended to be stopped either by the pivot points itself or by the pivot support one. So pivot support one hold the market here. This is a good sign, is a sign that the bulls have some control or have great control of the market. And on previous months, market also behaved like this, like on this month pivot support one held the market. On this month it even didn't reach the pivot support one, but the pivot point itself hold the market. So from the past few months we see just signals of bull market on euro dollar, and at this month of June we can see that market has already tested the monthly pivot point here, has passed through it, and now is heading in direction of the pivot resistance one. So this signals a bull power, the test of the pivot, and the market is standing above of it. And finally, let's start to see some intraday charts. Let's start with the 4-hour time frame, and with the weekly pivot points we can better see the weekly pivot points at the 4-hour time frame. And let's see what's happening here. Market opened above the weekly pivot point, has tested it by this bar, and have made a good upthrust here, and now is consolidating just in the area of the weekly pivot resistance one. Well, in fact, this is a sign of bull power on the market. The test of the pivot point, the market standing above it, and now just fighting with the pivot resistance one, and apparently is trying to break it up, is trying to pass through this line. So this is a sign of bull power on the market. And if we see the previous weeks, we can see also signs of bull power. The market being held by the weekly support one, not even reaching the pivot support one, being held in the middle of the pivot, and so on. Here we can see market passed a bit, but on the previous 2 weeks we can see some signs of bull power on the market. And now especially on this week we can see this is a good sign of bull power on the market. Let's see if the market can pass through it or not. Let's quickly see the MAs on the 4-hour time frame. We can see that almost all of them have now a bullish configuration. We have the 20 above the 50, which is above the 100, and the only thing that needs to happen is now these two MAs become above of the 200 period moving average, but being just these three ones well aligned and pointing to the upside, driving the market upward, is a sign of healthy bull market. So just in quick, this is a bull market configuration by the moving average on the 4-hour time frame. Now let's pass to the lines on the 4-hour chart. Here we can see some important things. Firstly, market has been made in this upward channel on the 4-hour time frame, market by these two red lines. You can see market trading inside of it. Market has made a first attempt to break it to the upside and return it back inside the channel, and on this week it made another breakout to the upside, and now this breakout is apparently being sustained by a sideways consolidation on the 4-hour time frame. This consolidation is being marked by these two lines in red, and the upper border of it is the 131 and 10th. So we see here breakout to the upside and sideways consolidation right here, and we have some structures here that give some support to the market. We can see that the market is consolidating just above this previous top and above this nice area of support, which is the 130 and 50. This area also served as previous supports, as we can see here on the zooming out chart. Here we can see another area of the 130 and 50 acting as support, many areas of events here. So this is an area that drives the market to the upside, and the lower border of this consolidation and also the upper border of this upward channel. All of these structures gives support to the market, and the market is apparently trying to break this to the upside because this is a bull sign. It looks like a consolidation flag, and the flag in this case is a sign of bull power on the market. So the expectation here is a breakout to the upside of this flag. And of course market can break it to the downside also, but what we don't want to see here is an extended period breakout to the downside, because the return of the market inside this upward channel would not be a good sign for the bulls. So we can even accept some penetration here. Here we will see better on the hourly chart, but we don't want to see the market return too far and trading inside this channel again. As long as the market stays consolidating here and trying to break it up, it will be a good bull sign on the market. And why we don't want to see the market returning inside of this upward channel in the case of an intention of continuation of this up move, since this is an upward channel? Well, because on the daily time frame, in fact, this upward channel looks like the bearish flag, and here we can see market make it a down move, and now this looks like a bearish flag with expectation of the breakout to the downside, giving power to the fact that the market just hit the 1618 extension of this ABCD explained before. This would be a bearish sign of the market if the market returns right here, given even continuation of formation of this flag and after this breakout to the downside. So we don't want to see the market returning inside of it if we expect this breakout of this flag to be true. We expect it to be consolidating, and after this the breakout to the upside. So this is important zone, important structures that are being made on this zone that we need to pay attention for it. Now let's see another overview of the 4-hour chart. Now let's see the harmonic patterns, and we can see very important information here with the harmonic patterns. First, let's see that we have this first butterfly in blue, this being the 127 extension of this butterfly. Note how the market respected this 127 extension with the retracement, and market continued up to the 1618 extension. This is the point. Market here is the 1618 extension of this butterfly, and we can see here another smaller one, this butterfly in green. We can see here that the 127 extension of this butterfly in green is exactly on the 1618 extension of this first butterfly. So this gives us another pattern, which is the 3 drive sell pattern, which is marked by these red lines, this here and this here. So this is the first drive and this is the second drive, and this point is the point of the intersection of the 1618 extension of the first drive with the 127 extension of the second drive. And market seems to be apparently respecting this completion point of the three drives pattern by making some consolidation of it. Take a look also that this point, despite being the completion point of the 3 drives, is also another point of resistance. This is the 127 extension of this ABCD, A, B, C, D point, and it's also the 618 fib resistance of this roll down move. The roll down move is not shown here, but this is the 618 fib resistance. So we have a lot of different structures of resistance here by the Fibonacci and harmonic patterns framework. We can see the 127 extension of this ABCD completion point of the 3 drives pattern that make it the form of 2 closer butterflies, and the 618 Fibonacci resistance. So market is now at a point of decision making. Market is fighting against a zone of important resistance, and as we stated previously, this is the zone where the trend line, the downtrend line of the daily time frame is passing, and market is fighting against it to see if it has the power to break it up to the downside. So depending on how market will respond to this area, depending on what will develop from here, it will gives us the information. Is the market ready to continue to the upside and pass through this area, making this pattern fail, or will the market respect it, at least with some retracement, and go down back? We don't know. We need more time to see if the market has the power to break up this point. And as we have seen previously, this area of strong resistance is also the weekly resistance one, so this adds even more resistance to this area. Here on the George Napoli framework, we can see that trend is now bearish. Okay, trend is bearish, but despite the trend being bearish, the market is consolidating. Okay, so this can be the bullish dynamic pressure when the trend becomes bearish by the MACD predictor indicator and the market stands in a sideways consolidation. This indicates bull power of the market. And also on the George Napoli framework, we can see that the market stands above the 25 by 5 displaced moving average. That is a signal of bull power, because this is another tool that George Napoli uses to mark the trend. In this case the trend is up. Now let's see the price action framework on the 4-hour chart. Here we don't have the MAs, because in the 4-hour chart the MAs are not used on the price action framework. We can see here that we had a bullish signal, the pin bar here, that could have been used to enter long on the market. Okay, here we maybe have another pin bar, because this is a point of support. Okay, pin bars on the 4-hour charts should be at the point of support, as this one was here. Okay, so it was a valid sign, but I don't feel comfortable to take the sign right here, because this is not a good looking pin bar, and because, as we said, this is strong area of resistance. So if you take it your position here, you could just take the profit at least of half of your position or close it totally and see if the market will have the power to go to the upside. Okay, and now finally let's start with the analysis of the 1 hour time frame. Here are the MAs, and here we can see a bull trendy market with all the moving averages pointing to the upside. Okay, the 200, the 150 and the 20, they are all pointing to the upside. They are on a position one above the other. Okay, so this signals very strong bull power and a trendable market. This is a situation when we have to look to buy signals. We have to look to buy this market because of this nice configuration of this moving average. So this adds very good bull power to the market, despite this being a zone of resistance, as we have already stated, but market could respect it and continue move to the upside. Now let's see the lines on the 1 hour time frame. Well, nothing much new here. We have seen this previously, this consolidation flag after this trusty move, and the only addition here is this uptrend line that is apparently holding the market in an uptrend. And here we have the level of horizontal supports being the 130 and 55 here in the 1 hour time frame, one of very good importance, but also the 129 and 60. So not much new here despite this sideways consolidation, and this gives the market a bull overview. It gives the market a bull power, and this is a bullish formation, and the most probable move is that the market will break it to the upside. Let's move on. Another overview. Here the George Napoli framework, we can see that the trend is bullish on the hourly chart, as we are seeing here, and when the trend turned to the bearish side here, we can see that the market stayed most of the time in the sideways consolidation. So what is this? This is also the bullish dynamic pressure when the market is at a bear trend by the MACD predictor but stands in a sideways consolidation. This tells the power of the bulls. Okay, and now the trend is bullish, another bull sign. And take a look how is also the weekly resistance one. Let's see another overview of the hourly chart. Now the Fibonacci and harmonic patterns. Well, good information here. We can see that we have an area of confluence of support here, the area in the 130.05 and 130.03, and in fact the 130.05, the area of confluence support, and very near to it we have the 38 fib support of the entire up move. The entire move is not shown here, but this is the 38 fib support. Okay, so this is very important area of support on the hourly chart. And take a look at that butterfly that we have viewed on the 4-hour chart. This is the same butterfly in the inner one, but now have been seen on the hourly chart, and the sideways consolidation also here. And what we can extract from this chart, very good information. Firstly, if the market break this consolidation to the downside, okay, this one that we are watching, the flag consolidation to the downside, we said that we don't want to see it returning too far on the upward channel of the 4-hour chart that is looking like the bearish flag on the daily time frame, and how far we can accept that the breakout would be if it breaks to the downside. Well, we could accept it to the 38 fib support at 129.90. That coincides with the hourly confluence support. Okay, and this will be also the target of the breakout of this pattern, because the classical target of breakout would be the distance of this consolidation counted to the downside. It's approximately 55 pips. Okay, it's approximately the zone here of the confluence support, so we don't want to see the market passing through the zone to the downside. This is something that we don't want to see if the market really intends to continue its up move. So what we can see here is a move to here, and after it another up move by continuing the trend. Okay, this would also be in touch with the moving average, the 100, the 50, the 20, the configuration of the moving average. This will not break the configuration, it will add support to the market. Okay, take a look also that this area of confluence support is the previous classical analysis support. Here we have a top that is on the same level of the zone. So if the market breaks to the downside, this would also be a good level to look for buy signals at the moving average framework. Okay, and now let's see the daily pivot points to this day of June 6. Okay, market started above the daily pivot point, which is the one in teal, and has tested it, and this pivot point held the market at least until now, and market is continuing to move to the upside, and maybe will aim to reach the daily resistance 1. Okay, and if we see the analysis of the pivot points of the past days, we can see also that the market has bullish power on it, because it has been held by the support 1 as here, or by the pivot point itself as here. Okay, always above the support 1. Okay, always above the support 1, right? So this tells the bull power of the market, and especially on this day we are seeing until this moment bull power on the market, right? Now let's see another overview of the hourly chart. This is the price action framework on the hourly chart, and we can see here the crossover of the moving average of the price action framework, and this tells that we need to look to buy signals in the zones of the MAs of the price action framework. So this is signal of bull power on the market. Okay, the crossover in the market being held above the price action MAs. And so we have reached the end of the charts and the end of this analysis. And what is the conclusion after all of this? Well, the conclusion, obviously, it's personal, and I will give my opinion here. As usual on this analysis, I'm showing the signals of bull power and of bear power on the market, and most of them was of bull power. So in my opinion, the market has more chances to go to the upside than to the downside, or at the worst situation it could give space to a sideways consolidation for an extended period of time, right? So let's quickly review the main ones and make a quick final conclusion. Firstly, the market is fighting against this downtrend line on the daily chart. It still hasn't made a true breakout, and it will fight against this area of resistance here. Okay, so market needs to decide if it will pass through the zone, and at the same time that it's fighting against this trend line and against this area of resistance, it is fighting against these structures, these ones, the third drive pattern completion point here, the butterflies, the 127 ABCD and the 618 fib resistance. Okay, so all of these structures, and also the weekly resistance one, right? So all of these structures, the trend line on daily time frame, the area of horizontal support, all of this Fibonacci harmonics, the weekly resistance one is a strong area of resistance that the market is fighting against it right now. The result, we obviously don't know. We don't know if the market will have the power to break it to the upside, or if the market will make a complete reverse from this area and continue to move to the downside in respect of the main trend on the daily time frame, right? So market is right at a decision making zone. We need to wait a little bit, and if the market will go to the downside, we can accept it to go to this zone. This would be acceptable retracement for the market if it really intends to go to the upside. This area of 130 even and 129.90. But as we have many structures and signals of bull power on the market, like the classical moving average, like the pivot points, like this flag consolidation after nice uptrust, like the breakout of the upward channel on the 4-hour chart, like the price action framework, like the bullish dynamic pressure on the George-Napoli framework. As we have many signs of bull power, I personally expect the market to go to the upside, but we don't trade based on expectations. These are just to aid the management of the trades on the market. We must trade on good and nice signals, being it objective or subjective, but we don't trade with expectations. Okay, so we reached the end of the analysis and conclusion. I hope you have liked it. I hope it can help you in your trades, in your view of the market. And as I always say, I'm not advising you to buy or sell anything on the market. This video is only for educational purpose. Okay, thanks for watching.